Did you know that the biggest mistake 90% of new and struggling traders are making is that they are placing random trades? Right now, if you're not trading based on a set of rules, a strategy, or at least a consistent concept you use every time you press the buy or sell button, then you're setting yourself up for failure. But the good news is there's a very simple way to fix this issue, and that is by either creating or learning a rules-based strategy that makes money over time. So in this video, what I want to do is teach you a 4-hour chart trading strategy that is based on a set of rules and that has provided me with more profits than nearly any other strategy I have ever used. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you're new, and I'll catch you on the other side of the intro and disclaimer. Welcome back, and let's go ahead and jump right into the rules of this strategy. As I said, this is a strategy I trade on the 4-hour chart, but all my preemptive analysis for this strategy is done on the daily chart. And essentially, what we're looking to do with this strategy is take advantage of big moves out of price on a daily chart coming from areas of value that push prices higher. Then looking for more areas of value to push price higher, more areas of value to push price higher, more areas of value, looking left, to push price higher. So with that being the case, since this is what we're looking for, there are two really important concepts you must understand in order to take advantage of this strategy, and those two concepts are trend and structure. So because I know that trend and structure are really difficult, especially if you're a new or struggling trader, what I want to do is share with you some really specific rules that I started to use really early on in my trading career that helped me to master the difference between trending markets, consolidating markets, and understanding where areas of value truly are. The very first part of this trading strategy is to identify trend on a daily chart. And something I use to make that extremely easy is just by plotting a 50-period exponential moving average onto the chart. When that's on the chart, the reason I need that is because it's going to be a part of the rules that identify the areas of structure I'm paying attention to possibly trade around. This is essentially what we're looking for with this strategy. Price to push up, create a new high, pull back to the previous high that it had just broken, and then we want to try to capture that trend as many times as we can as price moves higher. This is easier said than done. Price doesn't always look like this, right? So what I like to do is have that 50 EMA on the chart, and what I'm looking for is the highest high that was created above the 50 EMA. As you can see, that high is right here. If price was right here, this would be the highest high price made above the 50 EMA. I need to see that level broken before I can look for a possible trade. Once I see the highest high that was above the 50 EMA broken, then I know not only that we are in an uptrend now, but also that I have a valid area to start looking for possible buy trades. Now, just to give you a quick example and not to confuse anyone, but if price did something like this, pushed lower, pushed back up, and then started creating new lows below the 50 EMA based on our most recent low below the 50 EMA, then that would be considered the start of a downtrend, and I would be looking for short trades to go in the downward direction. But let's continue with our bullish examples. As we push this forward, you'll see that we put that new high in, right? And now if price is right here, what is our highest high above the 50 EMA? Really obvious. It's right here, correct? So with that being the case, what we need to see in order to identify not only trend continuation to the upside, but in order to also validate this as a level we want to look for possible trades from is going to be a break of that high. So if we do get a break of this high, after that, again, that validates we're still in an uptrend and also validates this as an area I want to look for possible trades on the 4-hour time frame. We're going to discuss the whole strategy in just a second, but I do want to make this very clear because understanding trend and structure is a huge part of this strategy. As we push higher, right now, what is the highest high above the 50 EMA? Very easy to see, right? It's right here. And this is essentially what I continue to do is look for the highest high to be broken, like it was here, highest high, broken. I want to pull back to that area, and then I want to look for long trades based on the entries I'm going to share with you in just a second on the 4-hour time frame. After that, I want to see yet again another break into new highs, a significant break. The reason I'm not counting this as a break is because it wasn't quite big enough. but we have a significant break up to here. At this point, I know that we are continued in an uptrend because we broke above the highest high, above the 50 EMA. Not only that, it validates this level as a level I can look for possible trading opportunities from, as you can see right here. So hopefully that gave you a good idea of how I'm spotting not only the trend on the daily chart, but also how I'm spotting valid levels of structure that I'm going to be trading based around and valid areas of value that I'll be looking for trades in on lower time frames. Now let's take a look at a bearish example of identifying trend and areas of value on the euro dollar daily chart. So something I want to make sure is not confusing. While we have price pushing down, I know stuff like this can get confusing when price does this, and then you're like, oh, we just broke above into new highs and we went above the 50 EMA. This must mean uptrend, right? I know of a lot of traders that think that, and that's just not the case. Especially for this strategy specifically, what we are looking at is one of two things to happen. We either see price push down to a low below the 50 EMA and then create a new lower low below the 50 EMA, or we push down and we see price push up above the 50 EMA. And in order for this to be classified as an uptrend, I always need to see a new high above the 50 EMA compared to a high that was already above the 50 EMA. Hopefully that makes sense. I want to see this move, a 1, 2, 3 move is what I call this, and the high must have already been above the 50 EMA. So it's either new highs above the 50 EMA or new lows below the 50 EMA, and everything in between is just considered consolidation. So let's take a look at trend and structure identification in the bearish direction. Right now, what is the lowest low below the 50 EMA, which is what we're looking for in the bearish direction to identify trend and structure. That would be right here, correct? So what do we need to see price do? We need to see it break below that low in order to ensure we're still in a downtrend and classify this as an area of structure we're looking to trade based on. If we push the market forward a bit, you can see that we in fact do get this big close below our previous level of structure. With that being the case, we can verify that we are in a downtrend and that this is an area that I can look for possible trades in on lower time frames. Again, the full strategy will be coming up in just a second. As you can see, price came to that zone and pushed lower. Now, while price is doing this for the bearish direction, we need to see price again break below the lowest low below the 50 EMA. So we need to see price break below that low. Let's see what happens. We actually do get a break below that low. Awesome. Now what do? Now we have another area that we can look at for possible trades. Let's see what happens next. We keep going, we keep going. Okay, now what's the lowest low below the 50 EMA? This would be a new low, right? We have a nice pullback here. We could see this as a new low. What happens? We get price pushing below it. And what does that mean? Again, a valid level of structure we can look for possible trades in on lower time frames. Now, this is something I wanted to explain, kind of one of the nuanced rules that I want you to understand. Just because this was my latest level of support that was broken in this downtrend and we went above this level of resistance or this swing high, that does not mean we're in an uptrend. Remember, the only way we can be in an uptrend is if I see a high that is above the 50 EMA get broken into new highs. Without that, we are still in a downtrend. So even though price did this, we came up to my zone and I got no trading opportunity inside of this zone, we're still in a downtrend. So even if price continues higher, I'll absolutely look at previous major levels of structure as well for possible trading opportunities. You should now have a good handle of the first part of this strategy, which is identifying trend and structure levels. If we're in a bearish example, we're looking for price to be pushing down, breaking into new lows while below the 50-period exponential moving average. We then want to see price pull back to the previous level of support that was broken. Now, what do we do from here? You see, anytime that I create or use strategies, I use this acronym. It's CEST. This stands for conditions, entries, stops, and targets, and any strategy I create or use must have very specific rules for each of these 4 letters. And this strategy is no different. So now you have the conditions for this strategy. The next step is to look at entries. For the entries, we're going to be dropping down to the 4-hour time frame. And to give you a really good example of this, I'm going to show you a trade I actually took here on the euro dollar recently. So what has the euro dollar done? Our previous lowest lows were right here. We broke below those lowest lows. And since then, we've had a nice pullback back into these lowest lows. I'll draw a little box there to help you visualize that a little bit better. As you can see, there is a nice area of previous support that should turn into resistance. Now what I do is drop down to a 4-hour time frame. Once in this 4-hour time frame, I need price to touch my level that I've pointed out on the daily chart, and I need to see what I call a candlestick pattern combination. So my conditions are met, price is in a downtrend on the daily, and price is now inside of the zone of value that I'm looking at for possible short trades. What I mean by a candlestick pattern combination is something like a shooting star candle followed by a red candle. So it's nothing more than having a specific candlestick pattern. My two favorites are shooting stars, hammers, that kind of counts as one, and engulfing patterns, bullish and bearish. Those are my favorites, but I need the combination part to be true as well, which is a candle that matches the direction I'm trying to trade. So in this case, it was a shooting star candle followed by a red candle because I'm trading in the downward direction. So I want to see a red candle for confirmation. I'll actually put a screenshot right over here so you can see the trade that I sent out to all of the members of the TTC Forex University about this trade. And as you can see, price pushed up a bit about halfway to our stops and then immediately started pushing down. We actually recently got out of this trade due to the fact we came down to another major level and put in a big green candle. I decided to exit. And speaking of email analysis, it is something that's included in the TTC Forex University, which we have a little space in right now if you're interested. To give you an example of what that looks like, here is the university itself. It is essentially a full training course that is meant to take you from wherever you are to accomplishing your trading goals. As you can see, we have the Basics Mastery course in case you're brand new. We have the Technical Analysis Mastery course followed by Trading Psychology Mastery course, Strategy Mastery course teaching you different strategies that I use along with the backtesting course, Risk Management course, Trading Plan Mastery course, a Strategy Vault with other strategies in it, a Discretionary Trading course teaching you all about discretionary trading, advanced patterns, and of course, the best setups of the week videos that I do each and every week for our clients to show them the areas in the market that I'm paying attention to for possible trading opportunities. As you can see, it is a massive course set up exactly like a university to take you from wherever you are to accomplishing your trading goals. So if you're interested in that, it's the top link in the description, or you can go to www.ttcfxuniversity.com. If not, that's completely fine too. Let's get back to this strategy. So we have the C and the E. The conditions are daily chart in trend, back at an area of value based on the rules I discussed at the beginning of the video. We have our entry, candlestick pattern combinations. So for a bearish trade, that could look something like a bearish shooting star candle followed by a red candle. That would be a candlestick pattern combination. The other example of that would just be a bullish candle followed by a bearish engulfing candle followed by a red candle after the bearish engulfing candle. My drawings look incredible. I'm aware of that. But that would be the examples of the bearish candlestick pattern combinations I use for this strategy. Now, after C and E, what's the next steps? Conditions, entries. We also need stops and targets. Where are we getting out if we're wrong? Where are we getting out for profit if we're right? So in this specific case, I decided to put my stop loss just above the zone of structure that I created. But to keep things really simple for this video, feel free to use something like the ATR indicator to stick it out with the volatility of the market. If you don't know what that is, I have a full video on the ATR indicator. You just type it in on the YouTube search bar and you'll find a video about the ATR. But for this example, let's just say you go 20 pips above the high of the candlestick pattern. And for simplicity's sake, let's say you use something like a 2-to-1 reward to risk ratio, which I think would work totally fine with this strategy. The point is not to have the perfect conditions, entries, stops, and targets. The point is that you have rules for these things so you can stay consistent. Now we're going to take a look at a bullish example of this strategy. And if you'll notice, we're actually on the 4-hour chart right now, and we're going to do the preemptive analysis on the 4-hour chart. I want to do this in case some of you are more like day traders than swing traders. I want you to know that this strategy can be used with any combination of time frames. I know I titled the video about the 4-hour chart, but that's just because I personally trade this on the 4-hour chart. If you trade a lower time frame, it's completely fine to use just 2 different time frames in order to make this strategy possible for the time frame you choose to trade on. So let's say, for example, you wanted to trade, your trading time frame was the 1-hour chart. If that was the case, if I did that, what I would be doing is all of my preemptive analysis on the 4-hour chart instead of the daily. And that's what I'm going to do right now. So here we have price pushing up. What is our first rule and condition? We want to see price break above a high. This high has to have been the highest high previously above the 50 EMA. Does that happen? Yes. After that, we create a zone right in that area. This is going to be where we look for the candlestick combination down on lower time frames. And in this case, we're doing our analysis on the 4-hour. We're going to drop down to the 1-hour chart and take a look at what happens. Here we are. Let's see what happens if we move forward a bit here. As you can see, price is getting lower, getting lower. Then we get this awesome little doji candle while staying inside of our zone. After that, we get a nice big engulfing candle, and that engulfing candle is in fact followed by a green candle. So in this situation, for a bullish trade, I would do something like place my trade at the close of that second candle of the candlestick pattern combination. For a 1-hour chart, I'd probably do a 10 pip stop loss, and that would look something like 38 pips. And we'll set up that 2-to-1 we talked about earlier. Let's click play and see what happens here in this case. As you can see, price pushes up and eventually does in fact hit those 2-to-1 targets. And so the CEST is all valid for a 1-hour trade. What do we have? We looked at the 4-hour chart initially. We have price in a valid uptrend by breaking above the previous high. We have a pullback to that area. That means our conditions are met. We then looked on our lower time frame, which was the 1-hour in this case, to find a candlestick pattern combination with an engulfing candle followed by a green candle. That was our entry. We then have a rule for our stop loss, rule for our target, making CEST all valid. So not only did I want to give you an example of a bullish trade, but also wanted to let you know that no matter what this video is titled, this type of strategy can be used with any 2 combinations of time frames. Now let's take a look at the top 5 major pairs on the daily chart, and I'm going to break down each of them using this strategy with you. Right now, take a look at the euro dollar. Here on the euro dollar, what type of trend are we in? Pretty obvious we're in a downtrend, right? So what needs to happen for me to start looking for these types of trades? Well, I'm going to need to see a bigger break of this low. I need to see a close below this low, a kind of dramatic one, and then I'll be drawing out a zone, waiting for price to then pull back to this area, and then I'll be waiting for entries on the 4-hour chart in this area. And I know that I've been talking about candlestick combinations. I also use things like double tops. I essentially look for selling pressure in these zones once all those conditions are met. But that's what I would be looking for in terms of short trades here on the euro dollar. What about long trades? Well, if I was to start looking for long trades, I would need to see the euro dollar break above the 50 EMA, create a high, pull back, and then create a new high compared to that previous high. At that point, I could start placing trades based on that area of value as we move higher. So that's what I'm looking at on the euro dollar based on this strategy. Next up, the pound dollar, very similar here on the pound dollar. We would need a big break here of our previous low. We would then be drawing out, or I would then, again, not financial advice, but I would be drawing out my zone. I would then look for a pullback into that zone and possible entries. Now, the difference here on the pound dollar is that these highs are above the 50 EMA. And what I really look at is the bodies. The bodies of these candles are above the 50 EMA. This looks like it could be a face, a potato head kind of. Anyway, so if price does this and starts breaking above this zone, the difference between the euro dollar and the pound dollar is that I could start looking for possible long trades from this area here because the body of these candles over here is above the 50 EMA. And that's the things that I'm looking for here on the pound dollar for possible trades using this strategy throughout the next week or so. Now, right now on the dollar yen, why don't you tell me, is this pair in trend, up, down, consolidation? What is it in? Hopefully you were able to say consolidation. What do we need for this to be in a continuation in an uptrend? We would need to see a break of the highest high above the 50 EMA. We have a high here that will need to be broken for us to say we're in an uptrend. We have a low here because, remember, in order for me to say that we're in a bearish reversal, I need a low to be created below the 50, and then I need a break of that low. Then I can look for possible short trades. But right now I can't look for short trades. I also can't look for long trades unless I want a less than accurate way of trading. There's strategies I use that take advantage of minor levels like that, but that's not what we're talking about in this video. For the strategy of this video, I would need to see a break and close above this level of resistance and then a pullback to that zone to start looking for possible opportunities to buy here on the dollar yen. Next up, the dollar Swiss. Here on the dollar Swiss, what have we just done? We've just broken above the 50 EMA. Now this says that bulls are pushing, right? Bulls are pushing prices higher, but bulls need to push prices higher. We need to see some relief while above the 50 EMA, and I'm going to need to see a break above this high. At that point, I can start looking for possible long trades in that zone. And the other thing that could happen is the dollar Swiss could drop from here. If that happens, then I'll be looking right back here at the previous lowest low below the 50 EMA for possible short trades out of the dollar Swiss. And next up, we're going to take a look at the Aussie dollar, and then I'm going to show you a stock that actually has this happening right now. This isn't something that just works in Forex. I've used this in crypto and in stocks as well. So right now on the Aussie dollar, on the Aussie dollar, we have the previous high. That's the highest high above the 50 EMA. I'm not talking about this high. I just mean since the last break. Since the last break, this is the highest high above the 50 EMA. This is the lowest low below the 50 EMA. What that means is that this level needs to be broken or this level needs to be broken for me to have some type of trade. If this level gets broken, I can look at this as a little zone of resistance to possibly catch those trades from. If price pushes high enough to break above this level, then that's the level I'll look for possible long trades out of here on the Aussie dollar. And again, I know throughout this video I've stated that I use candlestick pattern combinations, but I don't only use those. That was just all I had time to go over. I'm sure this video has already gotten plenty long, but I use all different types of entries. The conditions beforehand, all the conditions are what make this such an accurate strategy, more so than the perfect entry reason. As I said, I use all types of price patterns and candlestick pattern combinations, all within this area based on a ton of different factors that I unfortunately don't have time to go over in this video. Now, let's take a look at a stock that has this happening right now. It's actually AMD graphics. Let's look at this. So on AMD, why don't you see, I've already got it pointed out, but let's talk about it a little. So why is this gray area an area that I'm waiting for price to get to and possibly waiting to buy from? The reason is because price has recently pushed up, broke above our 50 EMA, pulled back and created what? This would be our first high. This is our higher high. This higher high came after a high that was above the 50 EMA. So with that being the case, I know that this gives me a valid uptrend based on my technical factors. Not only a valid uptrend, but also a valid area to look for possible long entries out of on lower time frames. So something I may do in the coming week is drop down to the 4-hour chart on AMD and start looking for some type of candlestick pattern combination or some type of chart pattern in this area to go long on AMD, just to give you a really clear idea of how I would actually use this strategy. Now we're going to step away from the charts for just a moment, and I want to explain to you why I think this exact strategy is better for beginners and struggling traders than day trading. Simply put, if you are currently day trading and you're losing money consistently, your account just keeps getting lower and lower, then the main reason for that is likely due to the fact that you're not skilled enough to day trade. And I don't say that to try to offend you whatsoever. There was a time that I was not skilled enough to day trade or swing trade. But if you are day trading, you're placing more trades. If you're placing more trades and you're not skilled enough, you're going to lose more often. If you lose more often, you're going to blow your account faster. So it's so important at the beginning that instead of trying to just jump in to day trading, become profitable swing trading first. What is that going to hurt? Honestly, think about it. What if you took the next 2 or 3 months and you switched from day trading to swing trading, a strategy like this, and you mastered this strategy on a swing trading time frame? And although you didn't get as many trades and you didn't make the thousands of % per month that the gurus somewhere else have told you could make, at least you mastered the strategy. So now you have the rules down. Your reticular activating system can see it, and you avoided losing money faster than you should have. So at that point, once you have it mastered over the next couple of months, there's no reason you can't do as I showed you a little bit earlier in this video and drop down to smaller time frames with the same exact rules and the same exact strategy. But at that point, at least you'll have your head wrapped around having rules in your trading. Again, one of the biggest reasons for traders failing, I mentioned this at the intro of this video, is that they're trading randomly, not based on a set of rules, not based on CEST. This is an acronym that can literally save your trading. It will give you rules to follow so you can stay consistent and you'll stop just placing trades based on emotions, based on fear or greed or FOMO, fear of missing out, jumping into trades for no reason, moving your stop or your target. All of those mistakes, all the mistakes you're currently making, one of the biggest reasons you're making them is due to the fact that you likely are not trading based around a set of rules and a strategy that's proven to make money over time. So that's what I want to offer you today. And also understand that it's not just about the strategy. If you're going to become a profitable trader, you're going to have to master a strategy, which is your first step, but you'll also have to master 2 other extremely and just as important things. This is the triangle to trading success. The middle of this triangle is where every trader is that makes money. They have all mastered a strategy that's rules-based enough for them to follow and makes money over time. They've all mastered risk management, which helps them stay out of their emotions, stay disciplined to their strategy, and only lose an amount they're comfortable with per trade and in general. They've also mastered trading psychology/discipline, which has allowed them to stay in this game for a very long time. They are consistent. This is what making money as a trader takes. Again, if you want an organized step-by-step course that teaches you all 3 of these in a university style, going from the basics all the way to extremely advanced material, then we do have some space available in the TTC Forex University. That program also comes with the best setups of the week, email analysis is trades I send out that I'm actually taking based on the strategies you're seeing in the course, kind of like that euro dollar trade you saw earlier. Along with that, you have priority coaching support, which means while you're going through the course, it'll be me personally helping you with any trading related questions you have. So if you're interested in learning more about the details of that, top link in the description or www.ttcfxuniversity.com. If not, that's completely fine too. Hope you enjoyed today's video. If you did, click that like button for me. Go ahead and subscribe if you're new. Go ahead and comment if you made it all the way to the end. I'll try to like every comment that says they made it to the end. Hope you have a great rest of your week. I hope you trade green, and I'll talk to you in the next one. See you soon.